Hey guys, so this is going to be an intro to prop trading video, and the two prop firm I'm going to go over is Elite Trader Funding and Apex Trader Funding. These are the two that I use, and their rules and setup are very similar. So what is prop firm trading? A prop firm is a company that provides a trader with access to capital in return for a percentage of the profit generated. So they provide you with a simulation account, and they give you a challenge, which is you had to meet their profit target to pass their evaluation phase without hitting their maximum loss. And after you pass their evaluation challenge, you will be granted a funded account. And this funded account is basically another simulation account, but you treat this as a real one because you'll be able to get withdrawal payouts from the profits that you make on the funded account. And the splits are typically 80-20, 90-10. You get the 80 or 90. So the cost to start, you only lose the initial investment of the purchase cost of the valuation if you fail. So an example would be if you bought a 100K evaluation account and it costs you $120 and you blow the account up. You don't owe more than $120. You just owe that amount. So if the drawdown was 3K and you lost all of that, you only lose the initial cost. And after you fail, it'll renew in 30 days after the purchase for whatever you pay. So it'll renew for 120, or you can cancel it, or you can pay a forceful reset for like typically $75 or $80. So after you pass the evaluation, you get funded. The key thing I want to note here, you can only trade news, FOMC, CPI, anything like that on evals, not funded. So congratulations, you passed their challenge and reached their specified profit target. So now you try to meet their minimum trading days. So for Elite, you need 5 minimum days. Apex, you need 7. And it costs you $80 to activate your account for funded, and another $80 each month after to keep it alive. And you just basically get a fresh simulation account that you can treat as a live account because, like, once again, any profits you make on this is withdrawable. An example is ideal situation: you buy a 100K account for $120, you pass it, costs $80 to activate, you get the maximum of 2K payout. That's $1,800 net profit. That's ideal situation. So now I'm going to go over the types of evaluation accounts. The variety, there's many to choose from. The first one is the first step, which is a traditional one. The key thing here is unrealized profit trailing drawdown. This is very critical to understand. So your drawdown never stops trailing from your highest unrealized profit. So a brief example, you have a 50K account, that's the balance. Your max drawdown is 2,000. So essentially, you start with 50K. You need to have a minimum of above 48,000, or your account will be blown. So if you make $1,000 and it goes to 49,000 or 51,000, that means you need your account balance to be above 49,000 now. So over leveraged position can get you killed immediately. So you gotta size appropriately and slowly get to your profit target. And a quick large candle can wick your drawdown quickly. So like you could be up 1,000 on a trade and then close it for negative 1,000. That's already 2,000 since you were up 1,000 at one point. And this is unrealized trailing. You gotta understand that. So for funded accounts though, once you have realized profits plus 100 of your drawdown, so if for a 50K account here, 3K profit target, 2K drawdown, you just gotta get to 2,100. So 52 plus 100 trailing drawdown, and that trailing drawdown just permanently is removed. It stops following you. So example would be you get your balance up to 61,000, and your drawdown that if it hits, it blows your account, will be at 50,100. So you have 11,000 wiggle room before blowing up the account. So the trailing drawdown stops for funded accounts. That's the key thing to remember. Static drawdown evaluation. There's nothing crazy about this one. The only thing is the main thing, there's no trailing drawdown, but they have a very tight maximum loss. So for example, 100K evaluation, 625 max drawdown, 2K profit target. You gotta take it slow, and the winning trades will allow more wiggle room. So there's only 625, but 2K profit target. The ratio is high, but like if you have a winning trade that like gave you plus 400, now the ratio is like more closer together. So you just gotta accumulate wins and give more wiggle room. That's the key to static. The end of day evaluation. This is personally my favorite. The example would be 100K evaluation, and you would have two types of drawdown: the max drawdown and the daily loss limit. And the example is the profit target is 6,000. So the key thing in this one, most people don't realize, the max drawdown will only be tracked when market closed for end of day evaluation. So I'll give you an example. So a 100K account, you lose 2,000 the first day, and now it's at 98,000. The daily loss limit is 2,200, so you're within that limit. You just wait for the next day, you trade the next day, you're down another 2,000. That's $4,000 total because your balance will be at 96,000. That's past your max drawdown. But the max drawdown only is tracked when market close at 5 p.m. So yeah, it only triggers at the end of the day. And if your total loss by 5 p.m. is at, like, let's say negative 3.4 thousand, which is you have $100 wiggle room, then you are safe because your account will be it won't be blown, and you would the next day after you will have another 2,200 daily loss to play around with. So there's many times where I get really close to the max drawdown, but within that daily loss limit. So the next day I could have more wiggle room and accumulate the profits to come back from this drawdown here. So the pros and cons of prop firm trading. The pros, they're great for practice, and they're better for paper trading because you're emotionally invested in this, because it costs you for the initial evaluation, so that you got something in the game. For small traders, you could grow this exponentially. You either trade with $1,000 account and make like $5-10 a day, or you could spend a chunk of that, like $100 or less, $50, to trade with 100K capital and grow that up. And another thing, they're very cheap. So on promotion days, like how Elite Traders are doing right now, their 1 year anniversary, they're doing 65% off and buy one get one free up to 5 accounts. So you got to load up and take advantage of these sale days. Apex, I think I've seen they do 80% often, but they also do 90% before. No risk. The only risk is your initial investment of the evaluation, and then your opportunity to be gaining thousands in payouts a month. And the scale opportunity is you could get multiple funded accounts. You could copy trade them. And if you have 5 funded accounts, you can do $200 a day, and that's $1,000 a day. The cons of prop trading: strict rules. So they can mess up with your trading strategy, especially the unrealized trailing, because that's not something like any trader really wants to mess with. Because if you're a swing trader and you want like a big swing move and it goes up halfway and it comes back to break even, you're gonna eat up some trailing drawdown if that halfway gave you a new high in your balance. So there's also max set in your withdrawal. That's max number in the amount, and you also need minimum number of trading days before you can request a payout. I'll go over that next slide. There's lots of fees. The first, you got to pay the evaluation, which should be $100. You got to pay if you pass it, you got to pay another $8 to activate it, and then you got to pay $80 each month to maintain from there on out. So like if you had like 10 of these accounts or 5 of them, the cost just adds up. Usually monthly just adds up more. And the last thing, they could potentially encourage over leveraging. So on your personal account, you probably could trade like 1 or 2 mini on like a large account or like a $50,000 account. But like on prop accounts, since you have the ability to do like 12, 14 minis on a very small account, this could encourage like more excessive trading in size. So you got to be careful of that and just trade how you normally are. So payout table. So this is for Elite. Apex has something similar. This is the funding amount. So for the number of trading days, this is the minimum. First payout for you to request, you need 20 number of trading days. That's 20 trading days. So 5 days a week. 5 days weekdays. You need 4 weeks of them. If you're trading Monday, Friday, anything counts. You can do a micro in and out, or you can just trade normally. Second one is 15. Third is 10, and then fourth is unlimited. You could request unlimited amount, and you can request once a month. And this account size is how much you can get. So 400K account, you can get up to 1,000 minimum, 2,000 maximum. 1,000 minimum. Next month is 250, and then 2,500 third month. So the consistent rule for payouts: Apex has 30%, Elite has 40%. So the main thing, at the time of withdrawal request, the total balance in the account must not be greater than 40% of the total balance being derived from one single trading day. So your highest trading day will be a factor. So what you do is divide that highest trading day of profits by 0.4 to see how much you need to make before requesting a payout. So this example here, let's go with this one. Your highest, this category here, this column is your highest trading day. Highest trading day is 1,000. Your total P&L is 4,000. That's 25%. You're able to withdraw that. But then you gotta keep in mind, after the second payout, this 4,000 is gonna be reduced. Like if you take out $2,000, now this 4,000 P&L is 2,000 now. So highest day still remains 1,000, and your total P&L after the first payout, you're requesting the second one, is at 2,000. So that's gonna be 1,000 to 2,000. That's 50%. You gotta reduce that under 40 for elite. So you would need to make another 1,000 profit to continue withdrawing. So you need another 1,000 basically to get 33% or closer to 40. So this is the example here. 1,000 highest day, 1,000 total. So that's like basically day one, 100%. Day four, 1,000, 1,000, 1,000, 1,000, 4,000 P&L, 25%. And this just gives an example. 10,000 in one day. So you basically need to reduce that 10,000 highest trading day all the way to 40% before you can request the payout. So that's the calculation you got to do. Just divide your highest trading day by 0.4, and that's the number that you need to get to request a payout each time, at each request too. And that's basically it. That's all the rules in for prop firm trading.